Good day, everyone. Well, just as we're starting the webinar, and the markets decided to let loose to the downside. But you know, these little wiggles that we keep seeing in the markets seem to be par for the course. The markets are QE driven, more or less since 2009, and since January 2013, QE has been firing on all cylinders across all these major central banks. So the markets are loath to correct more than even 5 or 6%, as is the case in, say, the S&P 500. In fact, you'd have to go back all the way to 2012 to see a correction that exceeded 6% on the S&P. So markets like this free money, and you know, the saying "Don't fight the Fed" holds true for those who have tried to apply longer-term techniques to shorting the market or staying in cash. Buy and hold has been the champ for the last couple of years, which is highly abnormal in market history, and simply because we haven't had a QE environment like this. And QE does push the markets higher, so it makes it very difficult for mutual fund and hedge fund managers to beat their bogeys. Usually the S&P 500 is a typical index to beat. And in years past, even in the 90s, that mutual fund managers couldn't beat the S&P 500. The majority of them couldn't. I think you had a scant 15% that could, which begged the question of you know, why not just have a Vanguard type fund where you just put your money in, they index the fund for you. They don't try to time the markets. But that kind of market timing in that market or in the current market is treacherous, and I haven't seen any way to make money timing the market in that manner, and that explains why most market timing models prior to 2009, prior to quantitative easing, had failed flat on their face. And meanwhile, in 2009 to 2011, we were able to do very well because the market direction model is adaptive, and it does take into account material changes in the market environment. It had taken into account another material change earlier this year because the markets just kept getting more and more compressed. And so it's been faster to go to cash, and it's been faster to go back to a buy signal, as it did recently. And meanwhile, the market trend timing wizards and the market timing sites out there, just most collectively, just seem to be falling short of even being up for the year. I think collectively the trend following wizards are now right about break even for the year, which clearly is well below what the S&P 500 has returned for the year. And this group, this esteemed prestigious group, well deserved by the way because of their long-term track records, has been not able to beat the market since 2000. Well, I think that's since 2008. So it's really quite unprecedented times that we're seeing. And what we saw recently was leading stocks started to get up and go, but there had been a lot of damage done. So I think a lot of that damage needs to be healed still. And the market averages like the S&P 500 and NASDAQ composite have been moving sideways more or less as these leaders attempt to heal their wounds, so that we can probably end up going higher in this QE environment and continue this uptrend. Gil?
Yeah, my general approach here is, well, number one, I went on vacation last week, and that was a good time to go on vacation because the market's really been choppy and sloppy, going sideways. You can see the NASDAQ chart up here. That's basically what you got going on. It's a nice, funky little rally to highs, and of course they suck everybody in right at the highs, and they roll it over, and that's pretty, you know, standard issue for this market. So I always get wary when we start breaking out to new highs and everybody's getting constructive on the market, because if you look at individual stocks, and I prefer to you know, not look at the indexes and just watch individual stocks. That's why I come in, you know, I come back from vacation, the first thing I do is short Netflix and pre-open trade right around 450, 447.50. I think it's where I got my short off. And the thing broke down pretty hard. It's now trading just under the 50-day moving average. I'm kind of looking for it. It's testing this low. I'm kind of looking for it to undercut that low and then maybe try and bounce. If you consider this to be a punch bowl of death, a pod formation. You can see it's sort of wedging handle here. I don't know if you want to call that a weak, 1 week handle there, and then it broke out, but there's no volume. But notice the wedging handle, and the breakout occurs on no real weekly volume. And of course, you know, everybody's trumpeting the breakout, and IBD's all excited because they finally have something to talk about, because there aren't a lot of breakouts that are working. But this does turn into a punch bowl of death setup. And the way I handle these generally is I'm watching them. Now, I wasn't going to do anything in Netflix going into earnings. So I wanted to see what happened after earnings. And right after earnings, it gaps down. And as soon as they gap down, like I wrote in Chapter 6 of the first book that we wrote on short selling, when they break down through the 10-day or the 20-day, in this case they're pretty close. Once it gets down there, I'll short it using those as a upside guide for my stop. And that works. And so the stocks come down. I covered it. It bounced right off the 65-day exponential. I covered it yesterday, taking my profit. Now I'm waiting to see what this thing does here. I don't know if it's going to be dependent on the market or what, but you know, that's a good short that's worked. I don't know if anybody got excited about P is for pounded over here on the gap down this morning, but you know, this is just a big head and shoulders, and there's your right shoulder peak. You run right up to the 200-day or the 40-week moving average. I was really tempted to put out a small short position in this at the close, but I chickened out. Oh well, fortune favors the brave, and I was not brave yesterday, but that's okay. You could come back into it after hours. You could drop down about 26 and change. Could have hit it there short, and it's continuing lower. That's pretty ugly looking, but you can see you're breaking down on a right shoulder, so I'm guessing you're headed for the 20 level. So I'd be watching now. Rallies up to the 50-day at 26.51 might be shortable. Here you're a little bit late. You might undercut this level and then try to bounce. So I would keep a close eye out for that sort of thing on that one. But you know, it's a market of stocks, and you can come after stocks and hit them on the short side. You could have hit Amazon around 340 yesterday after the earnings came out. It broke down here at around 333 and change, or somewhere around in here, and then it rallied back up to 340 on that bounce. It came up to the 200-day, close to it. I figured you could have shorted it right there. Bingo, and it gaps down this morning. Now you've undercut these lows. Not clear on where it's going from here, but I'm not going to get a big woody for this now on the short side. You had to kind of come after it after hours. And I would say on these liquid stocks, people ask me, do I trade after hours on a very liquid stock like an Amazon, even a Pandora? Yeah. And I'll watch them after earnings, and I might go long or short depending on what I can figure out, if anything. It's not always that clear because the other day I did actually go short Apple after they came out with earnings. And the stock dropped about 30, 40 cents for me from there in after-hours trade, and I held it. It wasn't a big position, only about 2,500 shares, so pretty small for me. But the next day, you know, it's gapping above 95, so I just flip it and go long. And it's actually my biggest position, a 50% position right now, and it's holding in there okay. It seems to me that this is a parking place for institutional money in this environment. You had a pocket pivot on when was it? Wednesday, yeah. Pocket pivot on Wednesday after the earnings, so it's a little V-shaped, so it's hanging out here, volume drying up. It looks okay. I think if the market finds its feet and goes higher, it's going to go higher. So I'm willing. I've done this before, where you buy a big cap name. It's slow, but it steadily moves higher, and it's really the only place you can make progress. And you can be reasonably comfortable holding a decent-sized position because it is liquid. I mean, Apple, I can hurl 10 grand out the door or out the window, and there's always somebody there to catch it. So to me, that looks pretty good so far. And coming up to the top, you might say, if you draw a line across here, coming up to the top of this trend channel, and we'll see what it does from here. It did try to go higher, but the market's weighing on everything now. You're coming down right to the 10-day on the NASDAQ, right to the 10-day on the S&P. So, you know, a little this, a little that. Index is getting whacked. Some stocks are up. A lot of stocks getting pounded. It's pretty tricky overall. Some names I'm looking at. This RFMD had a little buyable gap. If it's trading at the lows of the range, I actually used I bought a little bit this morning, and I'll just show you how I work this. If we go to our 620 chart, you can see here you get the MACD stretch as it comes down to about 1080. A little bit of a break below, so that to me that's an undercut after the MACD stretch. You could probably step in and buy a few shares. It's trying to come up, but we'll see if I end up staying with this thing. But to me, it looked, you know, they came out with a good earnings report. They're a supplier to Apple. The iWatch is coming out. A lot of people are kind of poo-pooing it, including me. Of course, I poo-pooed the iPad when it came out, so that just shows you how smart I am. I did, however, buy my iPhone right at the peak of Apple's peak in late 2012, however. So I am good as a contrarian indicator that way. Anyways, other stuff, I think you got to keep an eye on software, Skyworks rather. I don't know why I want to call it Software Solutions, but it's Skyworks Solutions. And you had a Bible gap, a very powerful Bible gap up, stock coming back into the 10-day. I'd be watching this here. It might be Bible there as it comes into the 10-day. The interesting thing about this stock is it's selling at 15 times forward estimates, and it's growing earnings over 50%. I think it was the last quarter on that one, Dr. K. Let me pull this out of the way. I don't.
Yeah, it was 54% on the earnings and 35 on the sales, and it's accelerating on both counts.
Yeah, so it's. I got to get all this stuff out of the way. I wouldn't want O'Neill and Company to come and sue me for showing their stuff because you wouldn't want us showing their stuff. Somebody might actually see it and think it looks cool and then actually buy it or buy the service. But let's see. Quiet group out there today. Where are we? RFMD? No. Let's see. Yeah. EPS up 167%. That comes on the heels of 100% last quarter. 62, 300, 800, 400, 300 over the past 7 quarters. Next quarter going to be up 75%. So you're getting some growth here out of this name. What do they make? They make radio frequency devices. I remember this stock in 1994, buying it at around $4 or something, and the thing had a nice move from there. That was back in the days when I liked really cheap stocks and I was a broker. Somebody says, would you wait on SWKs for a gap fill before buying the stock? I don't know, would you? I watch it coming into the 10-day. I figure it's anywhere between here and the 10-day is where it might find support, and some of these don't quite get to the 10-day, so I might start nibbling here and see how it works out. But again, any longs I take are going to be dependent on what the market does. And today you'd have to say is a pretty weak day. But in my view, after this kind of move, zip, you're due for a pullback here. So we'll just see how this one goes. And again, at this stage right now, when you're in this sort of choppy, funky stage, I approach the market as a market of stocks. So I'm just looking at individual stock setups, both long and short. And I don't have a bullish or bearish leaning, so to speak, and I know that for some people that's difficult to digest, but that's how I operate, and that's how I've learned how to operate in a QE market because that's usually how it works. Now let's look at software or Skyworks Solutions here. What's going on here? All right, it breaks down with the market, coming down pretty hard right at the open. You got some sellers coming in, and you get the MACD stretch down here, so that's almost buyable right there. Now you're sort of backing and filling, your volume is drying up, so you're getting a little bit of this Wyckofian retest, and maybe the stock is able to come out of this. So I'd be watching this closely. Maybe you get a 620 buy signal and come in on it, but I actually will try and step in on the MACD stretch, and if it doesn't hold where I come in, I'll just unload it. It's up a little bit right here, just off the lows, so it's trying to hang in there. And I would say if there's any stocks that have a chance of going higher, it's going to be the very best ones, I think, and in this case, this is one of them. Somebody asked about Grub. I was looking at Grubhub last night, and you did have a Bible gap up. I think that was on earnings, but it didn't go anywhere. It's really choppy, so it's a tough one for me to get a handle, and that's a weekly chart. It looks like some sort of strange-looking cup of handle, but I don't know. I'm not going to really mess with this thing right now. One that's a new IPO that I find interesting here is GoPro. I'm long a little bit of this one, not a lot. But off the 10-day here, you get the 10-day moving average. It's holding along. They make the cameras for that you can wear, I guess, which is cool, I suppose. You know what it reminds me of? I was reading a lot of articles yesterday, and everybody's panning the stock. I mean, you go to Seeking Alpha, and everybody hates it. Everybody hates it. It reminds me kind of Tesla when it was at 44, and Solar City when it was at 19. Everybody hates it. The arguments are that it's an industry that has no barriers to entry. And then when I hear that one, and I look at what these guys make, wearable cameras, I remember Plantronics back in 1994. You remember that one, Dr. K? Good old Plantronics?
Oh, yeah, sure.
Yeah, let's go back in the Wayback Machine, and
Yeah, PLT's still around, and they had a great run from 1994 onward, and I remember playing that one in the 90s.
yeah, and it had a big move. But I remember one of the arguments against it was, oh, they just make headsets, so anybody can make headsets. Well, that's true, but if you make the best headsets, and you have a brand name that everybody clings to or thinks is cool, then you're kind of there. Let's take a look at pulled up my handy dandy HGS Investor software.
Yeah, there were a lot of copycats with those headsets, and Plantronics just had the best clarity, the best acoustics, which is of course critical. And yeah, with the wearable camera devices, I mean, anyone can make a camera. So I mean, the barrier to entry on making a great lens obviously is very, very low. But the question is going to be whether whether this company has the right design, because of course, Apple, Steve Jobs, all about design. So if they have the right design, so it looks cool when you're wearing it, it's kind of like a fashion statement. Plus the wearability. In other words, hopefully they have top-end engineers that are devising these things, so that they're most comfortable, as well as being able to wear them for an entire day of, say, sightseeing.
Yeah, here's
And the question also is, I mean, can it be duplicated? I mean, can that technology, can the design and all that be duplicated? It probably can. So they have first mover advantage. But I suppose that is a question. If other companies come in and start doing the same thing, then the barrier to entry is pretty low.
right. But in '94, everybody was coming out. Throughout the '90s, everybody was coming out with their headsets, and today, headsets are a dime a dozen. You can even get them get them with your on iPad. So if you buy those, you've got like 500 pairs over the years. Anyways, but here's Plantronics. Came out a little flag after going public and ran up. That was a nice move. But then his was real base, got real tight in here on the weekly, and then took off. And so had a big move back in. Anyways, just thought I'd show that. But it's hanging out right here, so we'll see how it goes. Let's see. They're still pounding on the market. They're just pounding on the indexes. Smack, smack, smack. Let's see. I wonder what somebody's mentioning. Would you buy Skyworks on the gap fill? Well, no, you're not going to buy it on the gap fill. I mean, come on. What's a buyable gap up? A buyable gap up is where you buy the gap up, you use the low of the gap up day as your selling guide. So the stock should not fail on that. And if it does, that's an issue. So, why would you wait for the gap fill? That would be a failure on the gap up. So somebody hasn't read our book. Either that or they're really not thinking there. Let's see. Could it be a combination of both? But let's see. Going back to G-Pro, somebody saying Kramer was keen on G-Pro. I think it's interesting. You got some selling as it tries to go above 44. We'll see what happens here. It may not work. They're still pounding the market. Let's see. Some semis are getting whacked. Yeah, they are, actually. AVGO getting whacked. NXPI getting whacked. Cavium getting whacked. SWKS is coming in as well. So I think that, puts it a little bit, the whole situation right now is a little bit questionable, and I would be careful here on the long side. If I come in on anything, I'm not giving it much room, so just kind of hanging out. Let's see, taking it down some more. But as I tweeted this morning, if you looked at the picture I sent, you got a train coming down the tracks. So, and you don't know what this market's going to do. You have no real clue. All you can do is go with the stocks. So, that's why I think trying to time the market is kind of pointless. You really have to watch the stocks. And what you want to label the stock as: market in uptrend, market under pressure, market on vacation, whatever. I don't know. Let's see. As Fed reduces, Dr. K, here's one for you. Are you ready for this?
Yep.
All right. As Fed reduces QE, the U.S. government will not be able to finance their expenditures with an A after the D. It should be an I, just so you know. Ergo, markets will drop in third and fourth quarter, forcing the Fed to instigate QE4. Your thoughts?
Well, I think that we've got a lot of QE in the pipelines, and I don't think there's going to be much indication of the Fed taking the punch bowl away, because they don't want to wreck this very fragile recovery, if you can even call it a recovery. And Yellen has already taken a very dovish stance, and is very critical on unemployment rates and economic recovery. So the Fed's got its hands tied, so do central banks around the world, to keep this QE party going. And you know, you've got interest rates that are probably going to stay lower for extended periods of time. So while the market says 2015, guys like PIMCO's Bill Gross says 2016, and I would probably side more with the 2016 outlook. And as we get closer to 2016, maybe that gets pushed to 2017. See how long this can go. One thing's for sure: the you know, these minor corrections you know, continue, and I mean, we're sitting fat and happy on certain positions. I know some members have held on some of their positions and traded around core positions and things like either shorting UVXY or being involved in XIV. You can see that it's had some volatility in there, but if you're taking the stance of I'm going to be with this QE market over a longer period until that changes, then you're sitting on pretty big profits. I've been sitting on one of my core positions, key core positions, since when was it, October of last year?
Is that the VIX?
And that would be the XIV.
Yeah.
I've been SVXY is the also. One second. SVXY. Yeah, there it is. That's the other one. It's pretty much mirrors the XIV. They don't have a 2X one yet. They were talking about having a 2X, kind of to mirror the UVXY with the 2X that you short when the market goes higher. So yeah, it's very unique, interesting environments. And for market timing, you know, we have to keep in mind that these buy and sell signals and cash signals, as we've stressed before, you don't have to go all in and all out. I certainly haven't, especially in things like the UVXY model. And I've also taken profits when you have them, when you're up 30, 40, 50%. There's nothing wrong with you know, sizing down your position and keeping the core, but taking some profits off the table, especially when you got this kind of volatility on your side. So the purpose is to make sure the volatility is working for you, not against you, and you do that by taking profits when you have them. And this has been that kind of market on a much shorter term time scale. Of course, that works very well on the short side when you're shorting stocks. Take the profits when you have them, and you can do very well even in this kind of environment where you have relentlessly uptrending markets.
Let's see. Do you work with a trailing stop loss on a buyable gap up or a pocket pivot? Huh? I work.
Well, yeah, I think they mean if you have if you bought something that's actionable and it goes higher. Yeah, I mean, there's nothing wrong with having a trailing stop loss, but I'd have a logical one. I don't use trailing stop losses, but I just know where I'm going to be selling it, provided the stock violates either a major moving average or the general market starts to turn really sour. I'll cut my positions pretty quickly. Yeah. But that's my style. If you're using a 7-week, the 7-week rule, then you're going to have a longer time frame in terms of how you hold these things. You're going to want to hold them probably down to the 50-day, especially if it's, as the rule states, if it violates the 10-week, rather the 10-day moving average within 7 weeks, then you switch to the 50-day moving average as your guide. And that has worked. That continues to work, but you have to be very selective about which stocks you're going to use that with. And you also have to be prepared to take steeper drawdowns. You'll have to be prepared to see, say, a 28% profit vanish to zero, and then, because that 0% then represents the support the stock will get at the 50-day, and then it'll start moving higher. So your trading personality has to be in tune with that kind of volatility in the position you're holding.
Let's see. Somebody's saying they took a position in RFMD. Whoops, RFMD. My dyslexia is showing up again. On what? On 7/18. So where would that be? Right here. Right here. Well, that was actually a pocket pivot breakout. So and then just a standard breakout. So that worked. Stock's moving higher, so it looks okay. Market's trying to bounce around. You know, my suspicion here is while I can make money on the short side, and there have been some good shorts. Obviously, we can see that in the action of stocks like Netflix, Amazon, and others. My suspicion is they're trying to drag in shorts here, and then they're going to run them the other way. So you got a natural pullback here, and they may try and run them the other way. I think we've become Japan, so you know there's going to be all this liquidity in the system, and it's going to be staying there for a long time. And I think what you end up getting are these markets that are very choppy and a lot of rotation. You see a lot of rotation. Stocks run up, and then they get hit. And the key, like let's take a look at say for Illumina here. This was the buy point here on the pocket pivot that we sent an alert out on, and things runs all the way up, and see it forms a nice beautiful cup with handle. Look at that, drifts down and then tries to break out and reverses on yesterday on heavy volume. So if you're buying breakouts, you're just a chump and you're getting sucked in. And the key to this market is buying here and selling when it runs up into resistance or the left side of the pattern. And if you'd done that, you take some profits, very nice ones on this, by the way. And that's how you handle this market. So to me, the bottom fishing pocket pivots, the roundabout pocket pivots, those are the buy signals I'm interested in. I like buying things coming in on volume dry up, so-called voodoo days, coming into a moving average, and then use that as a tight stop, just in case the thing doesn't work out. And I'll operate on that basis. So I don't usually use trailing stops really. I just figure if I can get 10-20% or more in a stock, I'm out. And if I can put that together with some other aspects of the technicals on the chart, like I'll use this example again. Came in. Go ahead, Dr. K.
Yeah, I was going to say, you had a comment about Japan versus U.S. and there's been a lot of this discussion. And Japan's done everything. Well, it's done a lot of things wrong in terms of their policy that hamstrings companies. The U.S. is not nearly as bad in terms of Japan's always had that. Once you get hired at a company, it's very hard to fire the person. So companies have a lot of slack and a lot of drag as a result of not being able to maneuver as a company should, plus all the other faulty rules that have existed since 1990 when the market topped. So if you look at a long-term chart of the Japanese stock market, the Nikkei, and you'll see in 1990 it absolutely collapsed almost 50%, but it never had that uptrend, that QE-driven uptrend that the U.S. markets have had since QE began in 2009. So you have this fierce uptrend in the U.S. markets that is just it won't give up because you've got not just the U.S. Federal Reserve but all these other federal banks printing money around the globe, which is unprecedented. Whereas in the 1990s, the Bank of Japan, it's only one central bank, and they can only do so much, and they. Like I said, they've done a lot of things wrong, so that's kept the Japanese market, the Japanese economy, mired in recession for. I remember in 2000, they used to say, "Oh, the lost decade of Japan."
Right.
It's been mired in recession for 10 years. Well, add another 15 years to that, because now we're looking at 25 years coming up.
Right, and like in Japan, basically propped up their economy by printing a lot of money, and they've been doing that ever since the 1980s. And so we're doing the same thing. Now, if Japan hasn't been wiped off the face of the earth, why would we, if we're in a much better position? So but you're still sort of in this muddled sort of environment.
Yeah, it's interesting. The U.S. Well, the U.S. It's a sign of the strength of or an influence of the U.S. As they say, the U.S. sneezes, the rest of the world catches a cold, and so right now, well, since 2009, the Fed is enormously powerful. Far more so than Bank of Japan, and in terms of controlling stock markets, it's 2009. The markets were up like 50 or 60%, and then today, this year it's just relentless. In 2013, I think was the worst year for hedge funds in probably 25 years, just because in terms of how far they lagged the Nasdaq and the S&P.
The person who asked that question, do you think there will be a QE4?
Sure, why not?
Sure, why not?
They'll call it something. Maybe they'll call it red roses or polar bears. It'll have some name. There'll be some mechanism for keeping interest rates at a very low rate.
Kihu, someone's asking about. This was looking to me like a short as it broke down, but the 200 days your stop, and this thing went right through, so you got to be out of there. But it shows why, if you're going to get short anything, you have to have a strong stop, and you have to pay attention to your stops. I keep on my computer monitors, I keep a little sign here. I don't know if you call it a sign, a label, I guess, that says I must lose to win. And part of making any trade is having a point at which you're wrong, so you obviously cover this. Now, would you go long? I don't know. I don't know if I'd go long the thing. It's breaking out, earnings come out, so it's extended. So does a train coming down the tracks imply you have a bearish view of the market? Well, I just said I don't have a bearish or bullish view, but every time the train shows up, it looks like the market's going to sell off, and then it kind of disappears back in the trees. It's more just joking around instead of trying to derive some deep meaning from what's just a silly picture on Twitter. Come on. GIII, pocket pivot, 1, 2, 3, let's see. GII apparel. Yeah, that's a pocket pivot. Isn't working too well today, though, is it? Let's see. Why? I don't know. It's coming up with Baidu. I mean, the thing that's driving all the Chinese internet, and they're all running today, is this. Baidu's gap up. It's runaway, breakaway, flyaway, gap up, whatever you want to call it. Let's see. What else? If you want to buy YY, go ahead, I guess. Do you still see PRLB as potential pod candidate? Well, look, I don't willy-nilly apply labels and go, that's a pod, and then that means it's going to fail. This could set up as a pod if this breakout fails. So it's not a pod until you see the breakout failure. You don't come in ahead of time and say, oh, I see this as a pod, and that's what you operate on the basis of. And no matter what it does, I'm going to just keep shorting it. I mean, that's stupid. So, you really have to understand that you have to learn to read charts, and that setups can resolve themselves in a variety of ways, either to the upside. For example, CMG was forming a big, deep cup, and it didn't break down. It started to, but on earnings, and I'm not going to do anything on any of this if I know earnings are coming up. Then you gap up on earnings, you go higher. Netflix is doing this, and it breaks out here, and it's floundering about. Now you break down decisively after earnings, and that's now a failed punch bowl of death setup. So, if you take this out and you look at this there, it could be a pod, but you don't know, okay? And the same thing here. If you take this out here and you look at CMG there, it could be a pod, but you don't know for sure, especially with earnings coming up. So you wait for the stock, the pattern to play out. Pods only occur when the stock breaks down, and it's really just a derivative of a late-stage failed base, which in the case of Netflix is, you see this big run-up and then a big, ugly cup with handle with a wedging handle, and it breaks down. And that's really what a pod is, but it's just a big punch bowl of death where you go straight down, straight up. And a lot of times the breakdowns from here can be very sharp. So I think that's what makes them fun is short sale targets if they work. So, but you're in a QE environment, and the old pods that I've looked at occurred mostly after 2000 and mostly after 2007, 2008, or during those periods. And the pattern doesn't become something until it actually fails. So, to ask me, do you still view PRLB as a pod? I never viewed it as a pod. I'm watching this. It could set up as a pod. Now it's a cup with handle breakout, it looks like. And there is some potential for someone to buy them out. So, the thing here, if you look in the weekly chart, you have had a big one. Now you get this big, ugly, double bottom base. It's broken out. It's stalled up here. It's pretty much, it's trying to break out. This could be a pod. I mean, this would be a classic and ugly pod type formation if that's how it panned out. But you don't know yet. For now, it looks viable almost. I was actually looking at this yesterday as it turned green again, and thinking about buying some of it because someone might buy them out. I would love to get lucky like on something like this. And this is looking, look, it's coming up. Ugly pattern breaking down, and then all of a sudden, boom, Zillow talks about buying them, and they're both going nuts to the upside. So let's see. ANET, not really interested in this one. It's too thin. What is this thing trading right now? 62,000 shares. Somebody thought this, some guy on Twitter, I guess, thought this was a shakeout +3. I think you're on drugs, personally, but, that's just me. you come in there, so you're not really shaking out below this low. It's got to have a feel of a shakeout, you know, not a I don't know, not just coming and testing it, but you know, theoretically, if it comes down to a level of support, and I've written this before and said this on Twitter, is that any trade is viable if you can find a viable and a nearby stop. You know, the closer it is, the tighter it is, the better. And so I'm not averse. You know, if you see a stock like Tesla coming down into the 50-day, and you want to test it out here because you can use a 50-day as a nearby stop, go for it. You know, you make a little money here. You could have even done that with Palo Alto Networks, which is V-shaped move, straight down, straight up. Never had any volume off the 50-day, but it comes down in there. You come down into the viable gap up below. You've got some tight reference points. You could step in and buy a little bit there. That's why I think, you know, as you see this SWKS come into the 10-day, you can use that as a quick stop. And that's 50.81 right now. That's pretty close, you know, about 1% away, a little more. So that's very viable. So you know, I'm not afraid to take shots. And like I said, I have to lose to win, and that means, you know, half my trades are not going to work out. And I expect that. And I accept it, and I bail out when things aren't working. And I run my risk management a lot tighter than I did during the 90s, when you could, you know, drop 50% and it was easy to come back. These days, you drop 50%, it's a long slog back, you know, unless you get a crazy month like I did in May of 2010 on the short side, where I made 85% in 1 month. But otherwise, the markets are not, it's not, you know, there aren't a lot of big waves all over the place that you can jump on and just ride them. You know, it's a lot more difficult, and it is a stock picker's market. Anyway, all that is to say that ANET doesn't thrill me. It's just kind of a IPO, coming down. ARRS, Dr. K, you put a alert out on this one the other day. You like this one?
Yeah, it still looks good. You know, we had a nice volume breakout, and looks like it's attempting to go higher here. You know, overall, the earnings, the sales are just soaring on this one. Really, they must have some special thing going on, but their earnings are also keeping up. And we're the last 4 quarters, it looks like we've been, you know, almost 100% earnings each quarter. So overall, I'm still liking this one. Oh, the other thing is, you'll notice in the last 4 earnings reports, it's had gap ups.
Yeah. Do they go anywhere? Yeah, one of them did. That one did too. Yeah. So this is the 3rd one now in the pattern, is it not?
Well, in terms of the earnings gap ups, I guess we'll wait and see. I think they're, when do they do to report? I mean, one says the 7th of August.
7. So that's probably wrong. If I check briefing, that's the best. You know, briefing, HGS Investor,
yeah,
also.
Briefings is pretty accurate.
Yeah, even though HGS Investor, I think, has all of like 4 or 5 people working there, they're able to get the correct earnings date. But apparently O'Neill, with how many people he's got working in that research department now, or did they move them all to India? Maybe, but whatever. He's got like, you know, 50, 100 people there. I don't know, and you would think that they'd be able to find the right date, but go figure. Let's see, what was that? ARRS survey says, briefing says July 31st. Anyway,
okay, so about a week away.
Up here, I like the G-Pro's holding up too. Are you guys all buying it now? Does a train come? Oh no, wait, that's an old question. Let's see. Z looks double top-ish on the 5-minute. You know what? I'm not really going to try and short this thing. There was a question in the chat room about Q being extended for a pocket pivot. Yes, it is. Yeah, and if you're wondering why I haven't been on the chat room all week since I got back from vacation, is because, number 1, I've decided to become a chat room snob like Dr. K. And number 2, after vacation, I want to catch up on writing the book that I'm working on. And so, you know, I'm primarily writing it. Dr. K is serving as a research assistant on this, or providing his research assistance, which is the way I would have written the first book, How to Make Money Selling Stocks Short, back in 2004 if Dr. K had still been there, and it would have been a much better book. This one is going to be that book with Dr. K helping me, makes it at least twice as good, I think. So I want to get back on track on that, and I write during the day and try to watch the market, and I don't have time to babble on the chat room. I do notice there's a lot of people who'd like to talk at the rear end because I review the chat logs for those of you on the chat room, just in case you're wondering. And I can see, comments like someone saying I've been short F5 for the last 2 weeks. Kind of a dumb comment because I haven't been short F5 for the last 2 weeks. I've come in and hit rallies on the stock, and yesterday was a good rally to hit when it started to look like it was breaking out, and you got the 620 break to the downside here, and you could have gone short it and picked up a couple of bucks, So it's a quick short, but that's basically how I play anything on the short side. It's a hit-and-run type trade, so to run around saying that I've been shorted for 2 weeks is basically talking at your rear end. So MCK, McKesson, I don't know, it doesn't get me thrilled. Don't like it. Do you like it, Dr. K? What are these guys? Are these guys making money? I don't know. These are big cap stocks, and the market seems to be moving in that direction because you're seeing, look at the Russell 2000. If I just showed you this chart on the Russell 2000, what would you think about the market, Dr. K?
Yeah, go nowhere.
It sucks. I mean, that's a bit. There's definitely a 7. What is that? A 5%. There's a decent correction there in the IWN. Now, what does that mean? I don't know if that means anything. But I think it means that the market's favoring the bigger cap names, probably lower PE. So I think, a stock like Skyworks Solutions, is GARPy, growth at a reasonable price. And I think that's the stuff they're looking for, the Apples, even CMG, if it can pump out 20% gains, this could be the type of environment where that is favored. And that happens from time to time. So
yeah, there's a massive difference in the way the NASDAQ 100 looks compared to, say, the Russell 2000.
Yeah, it's funky. Well, I mean, what would you say about that, Dr. What's your? Can you interpret that?
Risk off environment because things are so uncertain. So fund managers rather be in the big names, not the small ones.
I won't go too far with that, but a lot of people ask us about that. What does it mean? What does it mean? I don't think you know. I think if anything, it means markets favoring bigger cap names. Risk on is now off, and I just watch the stocks. I mean, if I wanted to puzzle over this, I guess I could have 6 martinis and become CUI, charting under the influence, and see how I feel about it. But to me, it's just kind of a circle jerk. XON, Intrexon, this is the one that I played off the lows here, and it's just kind of hanging out. These guys come out with earnings when? Anybody know? Let's take a look here. I think in August, maybe. Let's see. I do know that insiders were buying the stock off the lows, and August 5th after market according to briefing.com. So let's see. Skyworks is coming up. Look at that. Let's see if we got a not quite coming up to the top of this range, so it might run into some resistance, but I'll bet you it clears it and comes back. I got to think that this will hold up if the market doesn't blow apart. I mean, it's all dependent on that. This RFMD is coming up as well. We can take a look at this. Pushing back up again, 620 buy now, coming back up. Usually, the one thing you have to remember is in certain environments, institutions are rotating around, and when they have a position that they bought a lot lower and it gaps up, there's always a tendency to sell into it, especially if they're up on it. So you got to kind of check that. A lot of institutions have been buying this stock earlier, and they tend to sell into strength and buy into weakness. That's how most institutions operate, believe it or not. They don't necessarily always buy breakouts. That was one thing we had a hard time convincing Bill O'Neill of when we were trying to advise institutional investors. It's kind of comical to sit there and tell a big institutional investor that's running $100 billion that, oh yeah, look at this chart, see, you want to buy this breakout, and the guy's sitting there saying, well, I caused that breakout. So they're buying it lower, and when they can't buy anymore, they think it still has some value in terms of upside potential, they'll just keep buying it. So they create the breakouts, but they don't necessarily use that as a signal to start buying the stock. Okay. Anyways, So I got to think, RFMD, you get a little bit of they sell into that. You kind of watch how that's working. You see the selling dry up here. You get the MACD stretch near the lows, undercut. I like MACD stretch on the 5-minute plus an undercut on lighter volume is often a spot where if I'm short, I'll cover, or if I'm looking to get long and a pullback into a logical area of support, I'll step in. So, we'll see what happens here. This is still, the verdict's still, you're down 137 on the Dow, Nasdaq's down 31. It looks like a logical pullback, but we'll see. So, Jack be nimble, Jack be quick. Let's see, RES on a low volume pullback after a pocket pivot 3 days ago. What is this one? RPC Inc. What about it? There's a pocket pivot. It's like, you need us to bless it and tell you that yes?
Yes, sell your house, your wife, your kids, and all your valuables and put it all into RPC.
Oil stock, good earnings, gapped up or actually broke out on good earnings, and that's pulling in on light volume. If you think it's in a buyable spot, you can take a shot, but you don't need me to bless it. And not something I would go after. I'm kind of watching stocks on the oil side. I like the FANG, mostly because I think it has the coolest symbol on the planet. There are a couple others that have arguably cooler symbols, but I really like the FANG. BCI is hanging there. These guys all announce earnings in the next week or so. Hanging in there. Continental Resources hanging in there. Schlumberger, had a big move up. It's pulling back. That's been a big cap name. I've been waiting to see if they give it any support anywhere in here as it pulls back, but I'm not sure. Fake book. Someone's asking about. Not so fake, huh? It's holding up on the gap up. It almost gave it up yesterday, but it's 74.50 is the low, 74.51 to be precise. You're above it by about 1%, maybe a little more here. So you're within range if you want to come in and buy the stock on the basis of the viable gap up. It's interesting how the stock moved up and it kept going higher. There's no real big buy signals in here. Probably your best buy signal was this pocket pivot. And if you're using the 50-day as your selling guide on that, then that worked out because it would have kept you in the stock and moved higher. It didn't look so pretty here. It looked like it's ready to blow apart, but it worked. So the end of the world did not come to pass. Stock is now at new height. My guess is you're going to see it go tight here. It should do it for Dr. K. Would you buy this right here, right now, on the basis of the Bible gap up?
I'm not. The risk is very low where it's at, and if you look at other viable gap ups it's had on earnings reports, it was actionable and profitable. Well, you could argue that if you used the 10-day on the one in January, then it was profitable. But if you used the 7-week rule, then you're about breaking even on the trade. Whereas the one in July of 2013, that was very profitable. Whether you use the 50 or the 10-day moving average. On a fundamental basis, it's a big question whether this company is going to be able to make all the right moves so that it can continue this pace of earnings growth. That's a really big question. I don't feel all that comfortable that it will be able to do so. The space is incredibly competitive, as we all know. And you can see here on the earnings have completely blossomed into triple-digit gains. But I really can't see how, just based on their size, their sheer size of being about a $200 billion market cap company, that they could continue at that pace. So I think we're going to see some slowing in generally, the uptrend we've seen since 2013 has been pretty sharp. If you bought it, back in July of 2013 when it had that gap up, then you're able to sit through all the 50-day violations. You'd have a nice profit on your hands. Because it has been a nice run, but will it continue this kind of run? I'm very skeptical about that. So all that's to say is I think there's better stocks out there in terms of the chart setups.
Yeah, and the worst I could say here about this, or the best rather, is that if you're using a stop of 74.51 and you really want to buy the stock here on the basis of the BGU, I guess you can. But I think I agree with Dr. K in that I believe there are better stocks out there. So I'm actually keeping an eye on some of these things. GWPH, trying to get a little MACD stretch here, but it's kept coming down. Finally got the MACD crossing here. So this might be a low for the stock. I've been watching this closely on this pullback, and you got the pullback to the top of the base in the 50-day. Now this is one I bought here actually, and then within a couple of weeks I had a 30% gain in the stock, so I dumped it into this third gap up, and it comes in, and that's a pretty sharp pullback, but it's not abnormal. And you're coming in here, you got a little Wyckofian retest with the volume drawing up after the bounce off the 50-day. Notice there's no volume really coming into the stock off the 50-day moving average, but I think the way it's acting sort of implies that it wants to go higher. The question is if this thing can get going back up towards the highs before they announce earnings, I believe on, when is that, Dr. K? August 5th?
Yeah, to check everything.
August 5th, yeah. See, I got these memorized. Let's see. Watching GoPro, G-Pro. I noticed yesterday it seemed like people were buying it pretty sharply. Look at, you had some good volume this morning off the lows, you know, even as the market was getting whacked. And yesterday you saw some buyers coming in. It seems like they're coming after this. And it's holding up, you know, in this market to be down 130 on the Dow, 29 now on the NASDAQ, and you got a stock that's pretty volatile, new issue, down 49 cents or about 1%. That's pretty well contained, I think. So the RFMD is moving. Are you guys all buying it? That's it. Push my position up. Thank you. Let's see. Kihu seems extended for a pocket pivot. No. Yes. It is. We are the reserve currency, so that could be different until we are not. I think that's a reference to the discussion about Japan. Yeah, the U.S. has been the reserve currency, and that's one of the reasons. Well, that's the original reason Nixon decided to monetize the debt by going off the gold standard in '72. Is that correct, Dr. K? '72.
I think that's right. Yeah.
Yeah. See, it's always good to have Dr. K around. He's a walking encyclopedia, and in the age of the internet, there's not many of those around. Let's see. I'm hoping for a pocket pivot from King off. Well, hope is not an investment strategy, and this is kind of doggy, but I would say if you were smart enough to buy it here on this pocket pivot and you get a run-up like that, if you don't take the profit, you're stupid. Now, if you're hoping that it does something, it doesn't look like it's going to. So I thought we had QE Infinity. Well, it looks that way. What was the basis of the PPR pocket pivot issued on Kihu today? Oh, Dr. K, did you send that out? Oh, the break. Well,
yeah,
it's a low-range breakout. So if you get a low-range breakout on a pocket pivot, then that's viable. Correct, Dr. K?
That's right.
Yeah,
and it's done a lot of work in the base. It's done quite a few, a number of months of work in the base. So, in other words, it looks like it's something that could complete sooner than later.
Yeah, so it's coming up. So if you want to buy this, I guess, what would you use as your stop on this if you did buy this here at 99.84?
Well, given if the market uptrend continues, I'd give this. There's a lot of ways to play it. I mean, really, it's contextual to the market. I mean, I have a lot of answers. That's all to say, depending on what the market does.
Okay.
Right now, I'm naturally not. I'll tell you that I would not let it go back into the base. This little basing thing. I mean, if it went back down below, say, today's low, I would definitely be selling it by that point.
That's a very good.
By the way, the Nixon thing I think was 1971. I was toward the end of 1971, but is right in there. Anyway.
I think, like I said, that to me is a very viable strategy. Pretty clear cut, if you ask me too. Let's see. Give me 1 second here. Just adding a little bit to my GoPro right in here. See if this holds. Kind of come in a little bit. They'll hit you on a bid, though. That's the beauty of it. Let's see. UA, someone's asked about, UA, Bible gap up, but 0% earnings growth. So I don't know what to say here. Not something we would generally want to buy. Let's see. So I wouldn't bother with it on that basis. ABC, a Bible gap up. Amerisource Bergen. Well, that's a Bible gap up, I guess. What were the earnings like? I'll just say that for my money, I like Bible gap ups in new names or smaller, more dynamic names. because they tend to have the most juice. You know, you think back to Tesla's Bible gap up last year in May. You think back to LinkedIn's Bible gap up last January, so 2 Januaries ago, and those are the types of Bible gap ups that I like. So I like a Bible gap up. I think, you know, Skyworks is this is a nice Bible gap up, more dynamic name. I like that. It's had a couple. It has not really gone anywhere after this one. Where's another one? I guess that would be a gap up too, based on where it closed here. But I think at some point you might get some juice in something. It's had a big move, so I might look at it to get going from here. It's moving up a little bit, 51.75 on the bid right now. Apple's coming back up. Let's check out. I'm watching GWPH here. Hanging out. You notice you get somebody wants to sell a bunch. They get scared when the Dow is down 150 or something, and somebody just says thank you very much, and they take it. Let's see. Z. Perhaps Zillow can become a story stock. Can they change the home buying market like Apple changed the way we listen to music? I don't know. I think that's kind of a stretch, but you know, stock's moving higher, so if you're long it from down here, you really don't need a theme because you're sitting on a big fat profit, and that's all you need to know. Yelp. Well, Yelp is down and dirty. There are actually 4 stocks that I have seen as these are the ones that I hit early in July off of these peaks. They look like right shoulder peaks, and all of them are trying to consolidate this. Now, Yelp is hovering along the 50-day in a bear flag. Earnings come out next week, so I don't know what's going to happen there. Really wouldn't do anything there. Data is getting back above the 50-day. So if you tried to short it yesterday, say at the 50-day, I don't know if I did. I think I did on Wednesday, and it really wasn't doing anything, and so I just covered. Workday is another one. It's down. It keeps running into resistance along the 50-day, and then the last but not least. Give me 1 second here. This loud bird over here annoying me. Okay, where were we? Let's see. So all of these to me are the same. Yelp is the same. I'm not a buyer. I wouldn't short them into earnings either. So, can you explain why CMG and UA didn't? I thought didn't we send out a report on CMG? I mean, to me that's a viable gap up. Was there a reason? Did we not get that out, or was there a mistake there?
Let me see here. CMG. Yeah, we sent one out on July 22nd. So it's right at, on the day of the Bible gap up.
Yeah, so it was out there. UA 0% earnings. So somebody asked, well, again, so I already talked about SWK. So that was a white coffee and retest on the 5-minute, and it's starting to move higher. So, in this pullback here, light volume, it retested this low, and boom, now we get a 620 buy signal. So I'm already in the stock. What am I up to now? 6,000 shares. I'm not huge. I mean, I'm just kind of nibbling. If it comes out here, I can get heavier. Somebody asked, is there anything wrong or bad about the old book other than the weekly charts? No, I think it's a reasonable book, but I think it's completely disingenuous to write a book on shorting without a single daily chart, because any moron could take a weekly chart from the past, that worked out perfectly. Like, go take a weekly chart of Crocs from '97. You can put arrows on all the places. Short here, short here, short here. BFD, to me, the short selling is very difficult because, number one, it's done in real time. And number two, stocks tend to be much more volatile on the way down than they are on the way up. And last but not least, using weekly charts can kind of show you where you are in the bigger picture, but in terms of timing, the precise timing of short sales is all done on the daily charts. And I will actually look at chart patterns on a daily chart first, and then refer to the weekly rather than vice versa. Because the daily chart gives you a little more granular view of the precise price volume action. So, back when we did that book, I argued with Bill that we should have daily charts in every model stock on the short side that we show, so to speak, short sale model stock. We should have the weekly chart on one side, the daily chart on the other side, and he said no. That'll confuse people. And so, you know, you want to oversimplify it so that people have trouble making money on the short side rather than helping them figure it out. I think that's disingenuous, and I think it is a major failing of that book, and it's going to be corrected in this book. End of story. So, you know, I get, there's, the book itself, while it covers various topics, you know, we break down all the different topics, entries, exits, you know, picking short sale candidates, going through all the patterns. The way I'm writing it is I'm really reinforcing the same themes over and over again as I progress through each chapter. So it's a very complex topic. It requires the ability to use common sense to be able to think in real time, to assess what's going on in a stock, if it's in sync with the market. A lot of the breakdowns that we saw in March, early March, that were very profitable, I made a lot of money on the short side there. A lot of those were synced to the market. Sometimes they're not, and so we look at the variances in that and how you'd handle them. But anyways, somebody says the new book's going to be great. So anyways, GBX and FB are trading well today. What would you add to them? That's kind of a silly question. There was a pocket pivot on GBX here. If you wanted to add to it, you could, I guess, on that basis. I mean, but you know, there's a concrete buy point here. You don't need us to bless it. Facebook, again, Dr. K's not thrilled with it. It is a buy signal. You know, I don't know what it means. We'll see. You know, they're shaking everybody out here, it looks like. Look at Apple. I'm sticking with that. That's 50% position for me. And I'm sticking with the bought lower, and it's acting okay. So let's see, Gil, hope you had a nice break from the market. It's not the breakers hotel, but JL would approve of the rest. Thanks for showing everyone that you can be a great trader and take a break. Yeah, but it's hard. My wife goes nuts because the whole time I'm pulling up my iPhone and looking at the market. And when we went to go visit the Mammoth Caves in Kentucky, which were pretty wild, 400 miles of caves, the largest caves I think in the world. And we go down 280 feet down these vertical shafts, which was just wild. And you're following this matrix or maze of vertical shafts as you're progressing lower and lower on these very narrow little stairways, but they have nice high rails that come up to about your midway up above your chest, and so you feel relatively secure. But you look down, it's way down there. So we're way down there. You're not getting a signal. So, you know, I stress a little bit over that, but the thing is I had no positions on, so, but still, you know, I don't know if that's something, Dr. K, psychologically I need to cure myself of, because I get like, you know, disconnection anxiety. If I can't get a signal, I start feeling anxiety. At least I know wherever I am, if I'm not in the market or I'm running around on vacation or doing anything else where I'm not at my, in the cockpit, so to speak, I have my iPhone, and I can pull up quotes at any point. But when I get into a situation where I can, all of a sudden, oh boy, look out.
Well, it's yeah. I mean, I think we're married to broadband basically, because I mean, if I'm away for like just 3 hours, I know that I'm going to get back and I'm going to have, you know, a lot of emails sitting there. It's like I've managed to put everyone in the email, so I rarely, you know, I don't want to get interrupted with phone calls, or texts are okay, but generally emails are that's king, and everyone's got an email account. So yeah, but I just know if I get a little bit antsy, like on days I haven't been able to check the internet in like 6 hours or 8 hours, then I you know, don't want to have to come back to just, you know, a barrage of emails. But most of the time, my iPhone takes care of all of that, because, well, here in London or anywhere in Europe for that matter, and Cape Town, you're going to get signal.
Let's see, it's 9:08. We'll go for a couple minutes longer and get some questions. Someone asking where would you put a stop on Facebook? Well, apparently you haven't read our book or any of our books or seen any of our webinars or any of the educational stuff that's on the website, because a viable gap up uses the intraday low of the gap up day. In this case, it's 74.51 as your stop, or as your guide for a stop. You could give it 2 or 3% beyond that if you want to give some leeway to the downside, what Dr. K would refer to as porosity, you know, if you want to, but that's basically it. Does this Zillow and Trulia mania have any basis in reality? Well, to me, the reality of the situation is if you bought Zillow at the 50-day moving average, you have a big profit, and that's pretty real. So who cares whether it has a basis in so-called reality or not? Does anything? Do red lights and green, red stoplights and green go lights have any basis in reality? Is there invisible force field when you throw up a red light that's going to stop everything. No, it's perception, and that's what makes it work. And that's the same thing with stocks like Z and Truly. And I don't really care whether I can come up with some justification in reality. If I'm long the stock, I'm happy. And I'm not going to be upset by the fact that there is no justification for this in reality. SLXP holding along the 20-day, that's failed on the Bible gap up, and they come out with earnings, I think, in a few days. Not really one that I'm really interested in. Splunk getting tied around the 50 roundabout. No, not really. I don't really see that. So, do you use MarketSmith to find the new leading stocks? No, I don't use. I use HGS Investor software, and we also use Wanda. But I have to tell you that most of my best ideas, if not all of my best ideas, are derived from HGS Investor software and not an O'Neill product. Old name Melanex comes up with potential pocket pivot. Yeah, but where are you? You're way down here, so that's, I mean, I'm not really interested in this. It's already way too extended anyways. Tesla. Yeah, the new book is going to include some long side topics. We're talking about, Can Slim is dead. You buy stocks on roundabout pocket pivots. You don't buy breakouts anymore. Let's see, two last questions. Twitter. Nothing going on there. Earnings come out. I'm not doing anything here. It was a nice trade for me off the bottom from here to here. It ran into resistance up here. But, I'm buying it around 32, 33. It runs up to 43. I got, 25, 30% profit in that. I'm going to take it. Apple coming back nicely. Silica, SLC is hanging out. So is HCLP. They're just trucking higher. There's nothing really there. I'd use the 10-day moving average on SLCA, though, as a stop, I think, although it did violate it there. But it's so far up there, I don't know. I'm not going to buy it here. LAZ, what is that, Lazy Boy? Lazard. Pocket pivot here. I don't think there's anything that gets me all hot and bothered, though. Coming out on a 42% earnings gain. Financial investment brokers, that's what they do. Yeah, it looks okay. 14% sales growth. It's a broker. It doesn't really thrill me, which means
it's pretty slow and it violates the 50-day, regularly. So
maybe Schwab. Schwab's hanging out too, but it doesn't thrill me. Anyways, I think we're done for now. I'll just summarize. Again, you've seen the indexes. They sell off. They come back. But I haven't been watching the indexes. I've been watching individual stocks. I've been able to get short stocks like Netflix, for example. Let's get rid of that. But at the same time, I think, my approach is I'm trying to think where the institution's likely to go. I think they go into Apple. And I think they'll take this one up towards 100, which would be the first time it's hit 100, which would really be, 7? No, 7 something, I don't know. But you can use that as your reference guide. No, actually, that would coincide with the old high, roughly. So it's getting back up there. I bet you can go through it, but we'll see what happens. I like the G Pro. I think that's setting up along the 10-day. If it drops below the 10-day, I'm probably gone. I don't have to worry about that. I like Skyworks on the pullback here, and I'm keeping an eye on GW Pharmaceuticals. Actually buying a little bit in here and seeing what happens. So market's down 123. We've actually seen a sell-off. We've seen the market recover again. They shook everybody out. They get everybody short, and now they're going to turn it. So, my general view is there are shorts that you can play, and you can make money if you keep your stops tight, and they work. But, by the same token, there are a couple of things here and there that you can buy, and I think you can make money there. But I think you still you stick to the what's now become, for me at least, a time-honored tradition of buying pocket pivots or buying them when they're quiet and then seeking to sell into sharp upside moves. And that's all we have for today, everybody. So nice to be back. Dr. K, you got any last words of wisdom, or are we in agreement here?
Just ride. I'd say ride the trend, but do it judiciously. In terms of how you're going to be positioning your longs and your shorts, because as we know, this is a QE market. So this is been a new learning curve for all of us, and that always keeps things interesting. So
yeah, all right.
Just keep your eye on the ball.
Thanks for showing up, everybody. We'll catch you guys next time. Take care.